What's up, guys? As I'm studying the housing market and the things that are going on and watching the interest rates and what they do versus the purchase loan applications, it's crazy. So I always track purchase loan application volume, because what that means is people that are actually applying for home loans. And that's a telltale sign of the entire housing market, if it's going to be going up or if it's going to be going down, or if it's flat, or kind of where are we with people making applications to purchase a house or making applications to get a mortgage. So here's a really interesting chart that I just went back 5 years here. Right now, you can see we've kind of bottomed out for a 5-year, and I go for a 10-year. We're kind of at an all-time low for a 10-year, and the reason is this chart is very interesting. It shows the difference between loan applications shown in the kind of orangish color and the interest rates in the bluish grayish color. So we've kind of hit our apex where they meet together, and the mortgage rate, if you look at the current, this is today's rates. Most mortgage professionals, we track mortgage news daily. It gives a pretty good mortgage rates right now are at 6.75%. Okay, now if you look at the chart of mortgage rates, you can see that we're also at an all-time high for many years. And of course, that's going to discourage people from wanting to buy a house, especially in the market where our housing prices, guys, haven't really gone down that much. They're kind of maintaining flat. Now, what is the fix? What is the answer? Where's the solution coming? I don't know yet. With the failure of banks, everybody's got a lot of million questions on what's going to happen with these big banks collapsing. What's that going to mean for our economy? What's that going to mean for our housing market? Or interest rates and that kind of stuff. I think the housing market is going to stay healthy. I mean, the fact is we've got jobs. So as long as there's plenty of jobs, there's plenty of people relocating to your area to buy houses, to get jobs, that kind of stuff, then the housing prices are going to maintain itself. It's going to stay healthy. We may not see the huge spike and increase in housing prices, but I think we're going to see it level off. It may taper back down a little bit, but I think the tapering down is really just regulating itself to where it should have been to begin with, because I feel like a lot of people were pricing their houses way too high. But houses still are selling. People are still borrowing money. We still do have a job, right? But I just want to shed some perspective on this, right? So mortgage rates go up and down. Housing prices go up and down, but if you will follow the purchase index, is what they call it now, the Mortgage Bankers Association, MBA, they put out a purchase index, is what they call it, and that's where you can track the number of mortgage applications for people applying for a loan to buy a house. So, although we are at an all-time low, what happens when the charts bottom out? At some point, they hit the bottom and they call it a bounce. So we'll see a bounce out. I'm betting this bottoming out that we've seen here, we're going to see it bounce back out. I think we'll see it bounce back out this spring, probably within the next month. March is here. We're mid-March right now, and applications are already starting to pick back up. Seasonally so, people buying houses in March. So I don't think this is the time to fear. I think if you're wanting to buy a house right now, just buy it and plan on refinancing next year. It's not the end of the world. I think rates will taper back down as soon as the government gets control of the inflation. Or at least that's what all the analysts are saying, and that's what we're hoping for. So I hope this helps you guys, and feel free to hop in and leave any comments.